What's going on, guys, and welcome back to another video on the FBA Capital Trading channel. And today I'm going to be telling you guys what nobody tells you about order blocks. So let's get right on into it. So first things first, you guys need to understand the difference between a high probability and a low probability order block, because you shouldn't be using every single order block you see, because anybody can easily come onto the chart and look for order blocks. You could just be an order block right here, order block right here, order block right here, order block right up here, order block right over here. But the thing is, you can find them on every single time frame. You can go to every time frame and you're going to find hundreds upon hundreds, maybe even thousands of order blocks. So you got to be able to differentiate the difference between a high probability order block and a low probability order block. So what is the difference? High probability order blocks are going to consist of order blocks that are on the higher time frame, order blocks that are above or below liquidity zones. They're also going to be created during specific times of the day. They're going to be order blocks that are at big figure levels. Those are what you're going to be wanting to pay attention to for high probability order blocks. Now, low probability are going to be order blocks that are on the lower time frames, that are during specific sessions of the day, such as the Asian session, that doesn't have a lot of momentum or volume in the market. Because the one thing we need as traders to have successful trades are going to be momentum and volatility, because that's what we need as traders for price to go in our directions, for us not to get stuck inside of consolidation. So the difference between these two are that now I'm going to go in depth on what is each. So what do I mean by higher time frame order blocks? For example, let's go to the daily time frame. The daily and the weekly are going to consist of major order blocks that big banks and big institutional traders are using to trade off of. Why? Because big banks and big traders have a lot of money coming in and out of the market every single day, millions, billions of dollars. So they're not going to waste their time on a 1 minute time frame looking to scalp. They're looking for long-term positions that they can hold over time. So if you look at US 30, for example, you see US 30 has been trending upwards for a long time. Let's just start off on the weekly. So we're going to start off here. The thing with the weekly order blocks, there are pros and cons. The things that you want to see. So for example, we have this weekly order block right here. Why is this a weekly order block? Because for one, this is the last down candle before this up move, and you can see the momentum that we had. Price came down, then the next week closed above, and then from there price traveled higher. But now you want to pay attention to how price came multiple times into these areas. So you see price pushed up, came down, retested this order block, pushed up again, came down, retested this order block, pushed up again, and there's a potential that we could expect price to potentially come back into this area again before pushing up. Those are all things that we got to keep in mind. We don't know what the market's going to do, but that's why we look for high probability order blocks that can lead to high probability trades. So what you want to do is, when you're every day, or not every day, every week when you're trading and when you're marking up your charts, you need to be going on the weekly and the daily time frame so that you can find these high probability areas that are going to give you high probability trades. So as you can see here, we have this weekly order block. This is something that you would be looking for long-term trades off of. And mind you, this is big ranges. So from the low to the high, this order block is about 1200 pips. That's a lot of move. So what you want to do is, if you find order blocks such as this one, is bullish engulfing order block on the weekly time frame, what I would personally do is I would then go to a lower time frame such as the daily, and I would look for order blocks within this order block also. But mind you, we're going to stick to the higher time frame because, like I said, we're looking for high probability order blocks. So one thing right over here where this weekly engulfing, right here, this weekly bullish order block where we had this engulfing candle afterwards, we'll go to the daily time frame. We also see that we have a smaller daily order block within it. So why is this important? For one, because this refines it. So now it makes it so you don't have to use this whole weekly order block. You can now refine it to the specific area here. Now what do we see here? You see that price came almost to the pip of this area. Almost to the pip, mind you. This is on the daily time frame. So if you're looking to catch trades off of these areas and you're sticking to higher time frames, you're going to be able to catch great moves. You're going to be able to catch expansions on majority of these moves that are going to lead to long-term positions. So for example, you have this retest right here. Then another example, you see price came into it one more time, almost to the pip. Look at this. If I zoom in all the way in, you see how close price came. And mind you, one thing you need to pay attention to is that price never closed below this area. It might have had wicks that came into it, but it never closed. That's something you want to keep in mind. When price starts closing inside of these order blocks, you just got to understand that the probability of that order block holding that structure is going to be far less likely. These are going to be things that you need to be telling yourself while you're looking at these areas. And then as you can see, price almost came to it one last time. But from here, we were able to get this very good entry if you were trading off the higher time frame just based off these higher time frames. Now mind you, let's go to even lower. Let's go to the 4 hour now. So now we have this weekly and we have this daily order block within this area. So let's go even lower and see if there's anywhere inside of it that we also could refine. Didn't mean to do that. Let's go even lower. And in this case, we don't have anything in here that we could also refine. But let's go all the way over here to where price almost came back into it. Where did it tap into? Did it tap into any order blocks over here? Let's go back to the daily, refresh it. What are we gonna do? If we understand that price was over on this uptrend, something you could have potentially looked for is if you would have did something, for example, like use your fib. The Fibonacci is something that I always use. I use on a daily basis, and if you watch my live streams or my weekly markup videos, you would understand that this is a tool that I use religiously. I use it every single day, and there's a reason behind it. There's not just because it's a Fibonacci and it's just this magic tool. What it's doing, the Fibonacci, is measuring how far price is likely to retrace. So one thing I would do is when I use the Fibonacci, I always draw them from the bodies of the candle. You can do them from the wicks, but one thing I've noticed is that every broker, all the liquidity providers, they have different prices. So for example, price might be, if you look to the right, 36,160 right now, but on a different broker it might say maybe 36,170 or 36,180. So one thing that I like to do is I like to use the bodies of the candles. So let's go like this. Pull your fib from this low down here. Why this low? Because this is the move that started after we had the retracement into this daily order block. Then we had this major push to the top side, and then I will draw it to this high because this is where the price starts to have that retracement. In this case scenario, you see that price didn't close. It closed below this 79%, but then you can see the candle above automatically came back in. So if we go to that weekly time frame and you look at it this way, you see that it came right to that 70.50%, but never closed below the 79% on the higher time frames. Higher time frames are going to be very key. So now let's go back to that 4 hour. What's going on, guys? So before you keep on watching the video, I just wanted to tell you guys about this opportunity that I have for you guys. So as of recently, I have been getting a lot of questions and comments and concerns about whether or not I do one-on-one mentorship. I personally do not do one-on-one mentorship, but I do have mentorship now, which I decided because you guys have been asking for a while now. So what will I be providing? I will be providing daily live stream access and mentorship every single day, where I will teach you everything that I know and I will guide you from zero to hero. And along with that, I will be giving you live trade analysis, and you will know all of my trades taken live real time. So with that being said, the price of it right now is $100 a month, but the price is not going to be like that for long. After the first 100 people join, I will be having the price go up. So make sure you take advantage while you can. And now you can finish watching the video. Now let's go back to the daily. We're just going to stick to this. But you can see that price from here closed above and pushed higher. So what the Fibonacci is doing is measuring how far price is likely to retrace. The 62% to 79% is how far it retraced. It retraced 62% all the way to 79%. And the thing that is doing is you're buying low and selling high. In simplest terms, that's what the Fibonacci is doing, and that's why I like to use these order blocks, because the thing with the order blocks are, when big institutional traders with big money, they're trying to get the lowest price possible when they're buying, and they're trying to get the highest price possible when they're selling. So what you could do is, to be able to trade with them, you would want to trade with the Fibonacci and this order block. And as you can see, if you look on this daily, look at the last down candle before the first up candle right here. Why this up candle? Because this is the up candle that traded inside of that order block, and that's where price started to reject. So I'll pull it from here, and then what happened? Once price came into it, price pushed higher. So that's a good showing of willingness to keep that overall market structure bullish. As you can see, we're trading up higher, and price came right into the middle of this. So another thing that I'm going to tell you guys as a tip when you're using these order blocks is always refine them. You saw how I refined the weekly order block into this smaller daily order block, but another thing you can always do is refine them by 50%. And what you could do is use the Fibonacci tool. I use the Fibonacci for everything. You can use it to measure the 50% of these order blocks, and what that is doing is going to give you an area that's more refined that you can target, and it's going to give you a better risk to reward. So say for example, you were looking to go long at this order block right here. You were anticipating that price might have this retracement, and you might get a potential reasoning to see price go higher, maybe you were also trying to trade off this 34,000 level, whatever you're looking at, then you would ideally want to have your stop below the order block, because you know that there is a chance that price could come all the way lower just like it did here and then go higher. So you always want to, if you're looking to trade off an order block, you always want to keep your stop loss below the low of that order block, if that makes sense. So what this does, you could have potentially looked to target this high, and as you can see, that would have happened. This could have been a 1 to 3 trade, but what refining it with the 50% does is now if you would have waited to potentially get in here, but you also got to keep in mind that it's not always going to come this far down, so you are potentially getting a better risk reward trade, but you are risking not even getting that trade because it's not always going to come into the 50%, as you can see with this daily order block down here. The 50% never got tapped into. It tapped into the high, and then from there it traded higher. So if you would have waited for the 50%, that would have never happened. But if we pull over a little bit more, you can see it got close multiple times, but it never really tapped it. So that's something you always got to keep in mind. So in this case scenario, it did come to that 50%, and that 1 to 3 trade now turns into a 1 to 7 trade. Just by refining it, it's the same chart idea, the same setup, but you were being more patient and you had an area of refinement that you can then look to take that trade. Now let's take it an even step further. So let's say we go down to the 4-hour time frame now. You see that price came into this area and started rejecting, started coming higher. But now let's go even lower. Here, let me go back and I'm gonna mark it up just like this so we can see where we are going to. We're gonna go to the same exact area on the lower time frames. So we'll scroll over. Let's find where that is, right over here. Now this is when you start to really get great entries, because now you're going off of a higher time frame directional bias and you're using the lower time frame to get better trades. So now once price came into this area, you already knew due to the higher time frames that you're looking for price to possibly continue in a higher direction. So now you got to understand the concept of liquidity. You got to understand that order blocks that are above and below liquidity zones are going to be also high probability. So if you can match these lower time frame areas, these lower time frame order blocks. So for example, we're going to use this one right here. We have this last down candle right here. This is going to be our 30-minute order block. And what I'm going to do is I'm also going to refine this by 50%. So now once price shows a willingness to go higher, we know that, like I said, based off the higher time frames such as the 4-hour and the daily time frame, we were looking to potentially get a long in here. So if we're looking at this as it's happening, we're on the lower time frames. We go to this specific area, and now that Fibonacci tool, the liquidity and the refining the order block comes in handy, because now all you got to do is wait for a potential trade. So now you can pull your fib from the low to this high. So let me go back in time so you guys see what I mean. Just like this. So you can pull this fib. You're going to make it the normal fib, not the 50%. Didn't mean to do that. Just like this. So now you have your fib drawn from this low to this high, anticipating price to go higher. So all you're doing right now is waiting for price to come lower and trade into potentially this fib. And now this is when the confluences start to match up. So remember how we refined that 30-minute order block to the 50%. Now we also see that the 62% of our Fibonacci tool is also at that 50% area. So something you could potentially do is look to get in right here. Why? Because we know that this is the 50% of that 30-minute order block. We know that we're inside of a higher time frame order block on the weekly and the daily. So now we have multiple time frames in confluence with each other. So now we're using our Fibonacci. Like I said, you always want to have your stop loss at least below the order block. And then what you would be targeting, equal highs, equal lows, because that's where liquidity lies. So these highs up here, you would be targeting these highs. You'd also be targeting potential highs all the way up here. You will be targeting all these areas because this is where all the liquidity is. And if you understand the market and you understand where the market is trading to, you understand that the market is trading towards liquidity. So something you could do, just like this, lower time frame, we have all of our refinements. Now we're going to take it a step further. Now one of the other things that I was talking about earlier in the video, if you're paying attention, is time of day. Time of day is going to give us the volume we need for the price to move in our direction. So now we're paying attention to the time of day. What time is it? This is at 7 in the morning. So what we would be doing is waiting for a potential New York session push higher. Why the New York session? Because if you're trading a pair such as US30, that is when it moves the most. Every pair is going to be different, but that's when it comes to understanding your pair and understanding and backtesting and understanding the way it moves. So for example, US30 likes to move during the New York session. So now I understand based off of the weekly order block that got refined into a daily order block, that got refined into a 30-minute order block, then I used the Fibonacci to also map out an area within that 30-minute order block, and now I'm putting time of day in place. So now I see that it's 7 in the morning and that there's a chance that during this New York session, we could trade into this area and potentially move higher in price. So what I would do is I would come down and I would still be waiting for price to potentially come in here. But another thing I would also do is if you go to maybe the hour time frame, you also see that there's an even smaller order block within this area too. So you're not marking up every order block, you're just marking up order blocks that have multiple confluences. Higher probability order blocks are going to be order blocks that have more than one confluence. Low probability order blocks are going to be trades or just with 1 to 2 confluences, and that's not enough. You at least want to have 3 to 4 confluences. So in this case right here, we have this 1 hour order block that got refined within the 30-minute order block that got refined within the weekly and the daily. So now we have multiple time frames all in the same directional bias. So now we would wait, potentially look to take this trade here, and then we would target the equal highs and equal lows, because we know that the market targets liquidity. And if you don't know what liquidity is, in simplest terms, liquidity is going to be above old highs, above old lows, below equal lows, and below and above equal highs. Why? Because above all these highs, there's going to be people trying to go long in the market. They're going to be having their stop losses, they're going to have their buy limits, they're going to have their sell limits, they're going to have their stop losses, and that's what the market is reaching for. That's why if you ever heard of the term stop hunts, that's why you get stopped out, because the market was reaching liquidity, and that's where your stop loss was. Because the market and these big banks, they know where your stop losses are. That's why you can't be trading like these other retail traders and trading these retail strategies. So now we see that we have these lows right here that could potentially get taken out right here. These below these lows, we could clear this liquidity, potentially trade into this 1 hour order block, trade into our fib long during the New York session. So let's see what happens. Price trades into it, and pay attention to how it rejected. Came to the 62%, came right below this 1 hour order block, but never closed below. And from here, price started to move higher after doing what? Clearing these lows to the left. And now we're already in profit on this potential trade that we would have been taking. Now let's see where price ends up moving. Slowly moving higher, slowly comes back down, retests, still showing a form of rejection. Then from here, pay attention to how it closes. I don't care about this big candle. Pay attention to how it closed. It never closed below this 1 hour order block, and it never closed within the 30-minute order block. And remember that refining that we did on the 30-minute order block at the 50%? Look where it is. Still never closed below it. And now look at the volume. What time was this? 9:30 in the morning. What does that mean? That's when the New York Stock Exchange opened, and that's when US30 has a lot of momentum. So now you're putting all of these pieces together. It's like a puzzle. Trading is like a puzzle, and it's like art. You got to put all these things, all these confluences together to give you a high probability trade. And off rip, just in one candle, you would already be at a potential 1 to 3 trade. Now at this point, you would have been broke even, and you would have been still potentially looking to target all these highs. It doesn't mean it's going to happen, but let's just see what happens. Over time, the whole trade would have been at least a possible, let's bring our stop loss back below. So this could have been a potential 1 to 4.6 trade, almost a 1 to 5. Just off the simple fact that we use higher time frame to refine order blocks to give us a high probability zone. So now we go all the way back to this weekly and this daily area. On the weekly, all this is a rejection. That's all it is on the weekly. But based off of that, based off this daily, and now look how the daily formed. It ended up being a bullish engulfing. And all we did was use higher time frames and keep refining it, going slowly down, refining it even more, slowly down. And we were able to catch this trade based off of time of day, higher time frame directional bias, understanding the liquidity, because you see, before this move happened, it cleared these lows. So what does that tell you? You're trading into order blocks that are below old lows or above old highs. Those are going to give you high probability trades. And mind you, this is just one example, one random example that I just went on the higher time frame. What I want you guys to do is try it yourself, because you're not going to believe me telling you. You're not going to think that this is the holy grail. So I need you to see it for yourself. I need you to see multiple examples. I need you to see repetitive examples of the same thing happening. And then you'll start to believe it yourself. Because if you don't believe it at that point, I don't know what to tell you, honestly. Because it's literally, it's showing you. And then let's just see where price overall goes from here. From here, price has started to do what it does. But pay attention how it still uses 30-minute order block as a potential support area. Now, let's just delete all these. Time frame order blocks are still here. So now we bring that Fibonacci tool again. We're going to use it from this move here. Why this move? Because this is the move that started this big expansion here. This is where price pushed up, retraced, and this is the low before it went higher. So now let's pull it to this high. So we pulled it from this low to this high up here because that's the highest point. Where did price come down to? Trade it back into that 30-minute order block once again. Trade it into the 62 to 79%. And then if you start to use the other confluences such as big figure levels. We see that price also traded into right here 34,400, which is a big figure level, just like this. Make it even because I have OCD. You see trade into 34,000, trade into a fib long. And what time of day? This is a little bit later in the day, so personally this isn't something I would have taken, but that's when time of day comes in handy, because something like this, it could give a potential trade, but it doesn't mean you're going to take it, because if the timing isn't there, you shouldn't be taking it. You shouldn't be defying your rules just to catch a trade. You want to follow the process and follow the system that is showed you that it works over time. But this is just one example of many that I could show you, that these order blocks, these high probability order blocks, using higher time frames, using time of day, understanding the context of liquidity, this is going to give you good trades. And using this order block concept with other confluences such as the Fibonacci tool, time of day, all of that is going to give you high quality trades. You only want to take high quality trades, because if you're taking any whatever trade you see off of random order blocks with no reason behind it, and you don't have a process behind it, it's basically useless. You have no reason to be in that trade. You want to take high probability trades that are going to give you the best chance of having a winning trade, because at the end of the day, us as traders, we're supposed to have long-term consistency and discipline with our trade plan. But if you're defying your rules, taking random trades, you're never going to learn. So if you at least take these high probability trades and take an L on it, you can then study it and use that data that you took from that loss to keep you from taking a loss like that again. You use the data that you take from these losses. Losses are lessons that are going to keep you from taking those losses again. And that's really what it comes down to. So hopefully this video gave you a little bit of a good understanding of what nobody tells you about order blocks. You should only be taking high probability order blocks. And I suggest you guys watch this video 1 to 2 times, because I do talk fast, sadly. But I have a lot of things that I try to go over. As you can see, I have a whole bunch of notes that I have to tell you guys on these order blocks, because there's a lot of things that go into it that nobody tells you. You shouldn't be using every order block. There's going to be specific ones you want to use during certain times, during certain sessions, during certain days, and we're using weekly and daily higher time frame areas to form these biases. And mind you, there's potential trades in here, all within the lower time frame, potential trades in here within the lower time frame, potential trades in here, here. Why? Because we know that this is a higher time frame on the weekly area. So all we got to do is, if we know this is a bullish area that we should be expecting price to move bullishly from, all we got to do is go to the lower time frames, find more, refine those order blocks, use other concepts such as big figure levels, time of day, understanding where the market is moving to, understanding all of those things. Because one thing you guys got to keep in mind is, before all of these moves happen, liquidity was taken. Before this move happened here, before this move happened right here, it had to clear this candle's lows in order to do that. So right here, had to clear that low before doing that. This move here cleared this low before moving higher. This move here with the middle candle cleared this low before moving higher. This candle here didn't clear low, so it just ended up trending from there. But you get the idea. Understanding liquidity, understanding the concept of higher time frame, understanding big figure levels, understanding time of day, and putting that all together to form one big picture and one big puzzle is going to give you the best high probability trade. And mind you, you're not going to have trades every single day. And that's just what it comes down to. If you want to take high probability trades, high quality trades, you're not going to come every day. You might get 2 a week, 3 a week, maybe 4 sometimes, but maybe even none. But that's when it comes down to you being disciplined enough to follow the process, follow the high probability trades, and being disciplined enough to wait for it. So hopefully this video gave you a good insight on how I personally look at order blocks and what nobody tells you about these order blocks. Because when no one tells you that there's going to be specific order blocks that you should be using, you shouldn't be using every single one. That's not what you're supposed to be doing. If it was that easy, everybody would be making money, everybody would be rich, everyone would be a consistently profitable trader. But in reality, 90% fail. So if you take these concepts, make sure you back test them, make sure you try and get more data and just use it to your advantage and study it. I promise you, over time, you will become a better trader and you will be on your journey to become a consistently profitable trader. So if this video was helpful to you, if you learned anything, if this video was able to benefit you in any way or give you a little bit of an understanding on how I personally view the market with this concept of order blocks and all these other confluences that I use, make sure you like, comment, and subscribe, and I'll see you guys in the next video. And don't forget to be motivated by the fear of being average.